Good afternoon, everyone. Thank you for staying with us. And today, we're going to explore most dynamic shift in finance, how capital investment, moving towards innovation, which deliver both strong return and sustainable outcome, measurable sustainable outcome. I'm so delighted to have this conversation with our experts. And Basem, first question, so how are you evaluating sustainable innovations if they're really, truly impactful or just a good marketing?
Great, thank you, Marina. And good afternoon, survivors. I know this is a tough panel here right after lunch. Actually, one of the most important things that differentiate a good pitch from one that has a lot of marketing in it is when the metrics are really, really particular. So you see that they're not just basically evaluating or slapping on a slide after that talks about ESG impact after a long pitch deck that talks about everything. And you see that the impact is ingrained in every single slide. The cause, the value, the contribution, the energy, the interest is definitely there. That's the first thing that inspires us to take this a little bit more seriously, because everybody wants to say, hey, listen, I'm going to save the world. I'm going to save my startup has the solution to do everything here. And saving the planet is a goal that we all have, but we want to see it in metrics. The other direction that we look at is when there's third-party validated information. So if you really want to demonstrate that you are going to make an impact in this world and you are not just about the marketing, prove it. Show us. What does the data out there show? And so these are kind of a few directions that make it pretty clear, and most of the time, what works and what is just there for marketing.
Thank you. Thanks. Jans, so there is a lot of projects with a really good mission, but they're weak in scalability. So how would you define scalable projects? Just your view.
Yeah, that's a good question. Thank you for that. It reminds me of what Bill Gates just said at the occasion of COP30, when he said, we're way too focused on the temperature of the planet, and we really need to see where we get the biggest bang for the buck in terms of impact. And I think that feeds into your question. If you have a high impact project that impacts one person or whatever, 1 square meter of soil, obviously that's not the biggest bang for the buck. So, building on what Basem said, we need to have reliable metrics and measure what the impact is, and then we can rank it very well. But yeah, unfortunately, there are not enough resources to do all the great impactful things, so we need to prioritize, and for that we need reliable data. And if something is not scalable, then obviously that is not going to affect the ranking amongst all the projects competing for resources very positively. So, I mean, as a company, as a founder, we need to think about making the addressable market as big as possible to have the best chance.
Thank you. Pranay, what is the early stage red flags which make you step back for investment opportunity?
Yeah, no, that's a great question. Actually, a lot of as impact investors, I think we're 70-80% of us are concerned about what we call greenwashing. And actually, I have an additional term which is called blue washing. So it's blue washing and greenwashing together, right? But those are the investments we try to, take care of. We try to, avoid. Now, what are some of the indicators, right? So we look at, as my colleagues mentioned, about third-party data, but we also do a lot of primary research. We spend time on the ground in terms of are there actual difficulties in terms of solutions that they're giving, and is the mission and the outcome scaling along with the revenue. So if it's only revenue and the mission's sort of going to get lost after a particular time, whether it's in education or in healthcare or in climate, we know that the kind of the initial pitch was more to do with fundraising rather than getting the quality of capital or the type of capital that's needed. See, also mind you, impact capital can very easily get looked at like soft capital, okay? But it's actually not soft capital. It's an even tougher capital because there is returns expectation and then there's impact. So just to give you a matrix, right? So we look at an average about 200 to 300 investments here across India, Southeast Asia, the Middle East, Africa. We'll probably do 2 in a year. So what people think that commercial capital is easy, actually impact capital is even more difficult. So yeah, that's my 2 bits on it.
Interesting. Thank you so much. Nisha, we discussed
Hi, Marina.
a lot about mindfulness and your journey, how you clearly create the vision, how you can support the founders. So could you please tell us more how founders need to present impact and profitability when they pitch into investors?
Thanks, Marina. Hello, everyone. Nice to be here. So in terms of founders, when they pitch to especially the commercial people, right? There is the catalytic capital which comes, that has purpose, it breathes more into impact. But when it comes to commercial venture capital, PE and all of that, it's about show us what the current status quo is and what is a big magnitude of improvement that you're trying to create here, right? And I would always want to know from the founders, why? Why you? Why now? Do you have answers to all of these? Yes. And then your financial KPIs and impact KPIs don't have to compete. They have to go together. They have to talk to each other. Strong unit economics feeds into strong path of profitability, and you have a very clear impact lens on it. All these together with founder clarity can do a lot of work in terms of tell the story of, yes, this is the work that I'm doing, this is my business model, this is a impact lens, and do you have a way to measure it, right? As Pranay said, 70% of the investors are worried about greenwashing, and 80% of the investors are using data to vet out the deals. But with impact, does data really play a lot of role in the beginning? Even in venture, conviction plays a lot of role in the beginning, early stages, when data is scarce. So the founders have to show us all of these very clearly, and then who is paying for your product? Because this is just not non-for-profit. When you go into bigger check sizes, you need to show us a profitability path.
Agree. Thank you. Thank you so much. Basem, investors always looking for an investment opportunity. And I guess, and assume me personally as an investor, I'm looking for most undervalued innovations or sectors, but have a huge potential. So how do you do your research? Tell us a little bit more.
So I like connecting with the major challenges that we face around us. So I mean, if you think that, I try to steer away from trends. You think of how the AI bubble is kind of forming, or the energy that sort of just came at the artificial intelligence and the amount of investment came there. You want to be steering away from that because that's already been hyped up. It's already been, the opportunity hasn't been missed per se, but it hasn't been, you feel like you're following a tribe as opposed to leading. I'd like to think that if we are in a situation to really do an impact in the planet, what areas do we really need to focus on, and what can we physically do within our circumstances, within our communities? I'm an avid scuba diver, so I love diving, and for me, my preference is to try to solve something underwater. Underwater and anything associated with water. So in this region, we know that water is a very scarce resource, and we really need to find solutions around it. There's been a lot of work that's been happening in this space, but not enough. I mean, not enough to even put a small dent in the amount of damage that could be happening to our oceans, to our seas, to our underwater life, to our fishing resources. And that's the area that I enjoy, or that I try to specialize in by seeing it firsthand and meeting with the the main causes of the problem, that they see where the problems are, and they try to work with them to solve these problems. Now, ideally, you want a problem that can be solved at a much larger level, so you don't want to be stuck to a region. But if you're talking about desalination of the Arabian Gulf, for example, and that being a major impact, you take that solution and you take it out to other scalable locations. And with that, there's a few other areas. I'm very enviable of the work that's been done in the agricultural space and trying to do all these vertical farming and all that. But I think we've also missed a bigger portion of the agricultural space where we've got all this land that's available, all this arable sand that needs solution. And if you really start innovating in that space and coming up with something that works, that's phenomenal. Now, some of the challenges in these that we've also noticed in the space is, a lot of the non-tech solutions take a very long time to scale up and a lot of capital, which also becomes very inhibitive. And then again, if you're within a vertical and a specialization, call it agricultural or blue tech or whatever it might be, or agri-tech, you start understanding how the ecosystem works, and from there, you're able to pool the resources to really go across the whole value chain and become more successful. So that's kind of what we try to do. And actually, and specifically within the educational space, I think there's a lot of edtech solutions that can help in bridging these gaps within the other non-tech spaces.
Insightful. Thank you so much. Jens, I know you have a lot of expertise compare emerging market with developed market. So if you can share with us what is the biggest difference when you look at the impact investment opportunities in these two markets?
Yeah, that's a good question. I've been in private equity maybe the first 15 years in the Western markets and the last 15 years in emerging markets, or a little more. I would say currency is definitely a big factor when it comes to investment outcomes, because if you invest hard currency, euros, Swiss francs, dollars, into emerging markets where the currencies can be very volatile, examples being Turkey, Egypt, Indonesia, Pakistan, and many others, then I mean, in some cases, if it's energy projects, you can keep it in maybe dollars, but usually you're exposed to the local currency. And if the local currency goes down 5x, your portfolio company needs to basically do 10x for you to come out ahead, and that's not so easy, obviously. I'd say the next thing is legislation. In many emerging markets, it's very tough to sue somebody, leave alone sue somebody successfully. In private equity, your investment horizon is 5, 6, 7, 8 years, sometimes longer, and that's a long period. And some people, when it comes to the exit time, forget what you agreed upon at the outset. And then if you basically want to sue somebody who's local, I mean, forget it. I mean, it'll take 10 years for a verdict, and the verdict for sure is going to be in favor of the local party. So I think these are two massive obstacles. Obviously, there are a lot of pros, like growth and maturity of the markets and so on. But if you ask about the risks, I'd say these are pretty high up on top.
Yes, thank you. Pranay, so we had a long conversation about data, and data is everything for investors. So how actually you measuring the impact, especially for sustainable investments, and what is their outcome compared to return on investment for commercial investment and impact investment?
No, great. That's a very important question. In fact, we keep every couple of years we keep changing our internal parameters, and we try to keep refining it. with impact, changing impact goals or maturing impact goals. But from our perspective, what we do is we have a ESG matrix that we have developed internally. And every opportunity that we get, we run it past through these about 35, 40 parameters. Because, I mean, as with any investment firm, you'll generally end up seeing a lot of opportunities, right? So it's not that you would be able to get into the depth with all of them. So first, if it meets that initial filtration criteria, then it goes to the next level. And that filtration criteria we've developed over years and years of, looking at a lot of DFIs, what are their matrices, a lot of successful other impact firms, and also from a certain global certifications, right? So will that particular startup or that founder's idea qualify in that category of certification? Then, all the usual matrices, like for example, we also put in certain negative covenants. So if certain impact measurements are not achieved, then kind of our return expectation moves higher, or if they are achieved, then it moves lower. We also back funds which are in the impact space. So the kind of capital I represent is pretty long term. It's not within a fund. It's balance sheet money. So with funds, we kind of link impact parameters to also the carry structure, which is the profit sharing that you do with fund managers. So those are some of the matrices that we use. Also, and I think in the earlier set of questions, we addressed that. There is only a certain point you can reach with data, but there is a lot of value we ascribe to what we call as primary research. So going on ground, spending time with the founder in terms of kind of what the solution they're trying to achieve. Because mind you, some of the innovative stuff that they're trying to do, the data is not there. I mean, how much ever we say about AI and, data sets being available in open source, it's not there. And then, obviously you don't want to spend millions and millions of dollars just to do diligence to identify if the problem is there, because that money might as well be spent on investing in the company. So yeah, I mean, so it's a combination of primary and data-driven approach.
So can I jump in after all these metrics that you're talking to all these founders about? I mean, it's amazing how if they clear those, then they really do have a great chance to continue their growth and their story. But that's really the challenge of creating a successful startup. And I think most of what we looked at, or we're talking about, where you maybe mentioned, a lot of the metrics are, if you want to look at the impact side, you want to see it impactful, it's quite complicated and difficult to marry it with successes on the financial side. So if they do too, they're almost, sorcerers or something beyond, where they really have this magic that they can do this. Yeah, hats off to founders that can really solve these problems, to be honest, because there's a lot of scrutiny in this space.
Yeah, we do. So in fact, one of the examples which you mentioned about a lot of the arid land present around this region, right? And then how can we best utilize it? So we invested in a company called TerraViva. It's based in the US. It's into something called Pongomia seeds. So the Pongomia seeds, it's a tree. It's called Pongomia tree. It grows in desert, high saline, kind of land. And the seeds from that, this company has, found a technology to use it for oil and for vegetable protein. So it's extremely interesting. Now, this guy took 4 or 5 years to, come to the level where he is and, make commercial sense out of it. But today they're making money. They're present in the US, they're present in China, India, they're coming here. They were trying to work with a couple of the oil companies. So the thing with impact investing, and then that's over time, we've learned it's not something that we knew. The timing may not be important, but just time is important. So you need to be there for 6 years, 7 years, 8 years, versus like traditional capital will be there for like 3, 4 years and they'll be like, let's flip it over.
But can I jump in with a follow-up question? So do you feel that a sector-focused space can really help? Because, I mean, that addresses 90% of the issues here, because you would have got all the brains thinking together around the table. You would have had a lot of mentorship and support. You would have seen what worked, what didn't work in the past. And then gradually, with some strategic partners, this really starts coming together somehow. I think that's kind of maybe some direction to kind of alleviate the stress and tension of being able to deploy capital in this space?
Actually, that's a very good point. We have backed 8 funds. Out of the various investments we manage 25 odd direct investments and about 8 odd fund-of-fund investments. Out of the 8 managers, 6 are sector focused. So there's somebody who's in education and healthcare. There's somebody who's in financial services, but fintech focused for the affordable masses. So you got it spot on.
Thank you. Yeah, I think it was really adding a lot of values for this dialogue. Nisha, so in terms of sustainable investment, if investors becoming more risk adverse or experimental, how do you see this?
Okay, actually, very good question. Investors have become more intentional with impact investing. And as I said, when it comes to later stages, it is more of your path to profitability, revenue models, how is the unit economics looking. But in the beginning, there is the catalytic capital and then the blended finance later. In this model, these investors are well aware of the patient capital, right? They know the life cycle for these funds are going to be a lot more, like your biotech fund and the impact capital fund, that's going to be a lot longer than just going in and making your X return, because we love return profiles. But in impact, we can't go with all about that. There is a deeper purpose that you need to understand. With that, a lot of family offices understand those, and they also have a portion of their allocation saying, okay, you know what, I want to give this into a longer term capital return. So investors have become more, I would say, matured in this space. Previously with ESG, it was a lot of backlash, right? What were you guys doing with all of that? And then now they intentionally, it was termed as sustainable, which makes a lot more sense than your other concepts. And they said, okay, we will become mature in this space, and we are seeing that very well received in terms of the industry. But for founders, as we spoke about the red flags, one thing is we should understand, the VC smelled red flags because we invented bullshit. So pretty much we are aware of what the model looks like. Just be clear about what you're presenting.
How do you sense, as you basically like sits in the management background of founders, or you do some research, like some insights which like make you sense it?
As I said, it's because we see a lot of decks throughout the year. We see thousands and thousands of decks, hundreds of founders that we talk to. We are constantly on that pattern recognition. And we know where the conviction comes from, but there are also where data comes in. So when you match all of these, you sense that very early, saying, yeah, again, we cannot be from a very judgmental space, Basem. I understand we are not from that space.
I was going to say, they all have the same dance, right? They're all coming in with the same sort of profile.
Absolutely.
I think one of the things, if you're able to really, I mean, when you're investing in the VC space or impact investing specifically, you're investing in the founder himself, right? Or herself, or the team. And you know, 9 out of 10 times, the story might not be clear as to where these guys going. And if they don't pivot in the first year, then you kind of question how good was their business model. And so there's got to be a gut feeling, there's got to be a leap of faith, and there's got to be a this and that. It's just
instinct plays a big role.
Yeah.
Even in terms of the other, any sector for that matter, just not impact, it's a huge role that plays.
Yeah, it's really, I think we can continue this conversation for a long time, but I just like to come back to measurement and what we discussed with Pranay earlier. So actually, how he sees that commercial investment in average 5-6 years in return on investment compared to impactful investment where you see 7 or 9 years average timeline. So Nisha, what you believe, how investors can accelerate to actually moving towards to impactful investment to show them the best cases when actually it's the return on investment is there, it's just different time lag.
Yeah, it's a very interesting space, Marina. It's a lot of the thing to do with the mindset. are the investors really looking at this from an impact lens, or are you just looking at from a number game? It is not a number game that's going to work here. You need to have that kind of patience and say, this is the mindset of this particular investment. When I go into impact, I cannot say I will give my LPs return in like 10 plus 2 years of the life cycle of a fund. It's almost like an evergreen model here that we are talking, right? And that's the investor mindset that need to change. But then again, when a lot of money comes in from the LPs and the family officers saying, hey guys, you know what, allocate this much into this capital, we are fine with this type of investments or long-term time horizon, it gives us that kind of confidence to say, yeah, we will do it. But then as VCs, we also have a fiduciary duty to return the funds to the guys that we have borrowed from. So yeah, a lot of credibility.
So here, let's frame this to our audience. Whoever is still able to keep up with us, you know, the post-lunch situation. Who, if assuming that you had two options, you know, you wanted to invest in something that will give you your money back in 5 years or 7 years without any impact, or 8 years, make the same amount of money, 9 years, let's say 10 years even, just to be fair, and make the same amount of money, but it's full of impact. There's going to be some major change here. Can we see a raise of hands on who would want to go after the 5 years, and this is an investment strategy, they just want to make the money regardless of whatever impact's done? Let's see the first group. So we're in an impact social. One person, 2, 3, okay. So that's 30, what, not even 3% of the audience maybe.
Second one.
And the second one, who wants to do the impact? I guess everybody's there. But then, you know, most of the case, in many cases, that's unfortunate because, you know, we see people that have great, impactful ideas, and we know that that's probably not even going to see the light. They're like, listen, buddy, you know, we love what you're doing, but, you know, continue playing along on your own. We can't invest in you. And this is quite sad.
Thank you for this. Thank you. I think we motivated the audience at least, and they can bring it broader to the other rooms. So questions for everyone, basically what and how you assess the balance between measurable return and social and environmental outcomes.
Probably I'll go with that first. See, it's a very funny line. That's what I said earlier, right? That it's even more difficult to do impact investing because returns is a parameter and impact is a parameter. So sometimes I've seen that actually if you're going to make like a 5x, 10x on a potential investment that you're considering, it defeats the purpose of impact because if you're going to do real impact, you can't have that much returns. So I know it's a very different psyche to look at it, but that's a matrix that we have applied. So for example, we did an investment in an edtech company, which was into training poor kids in computer science, you know, bringing computer science training to their homes. And when we exited in like about 6 years' time, we made like a 12x return on it. And the question from the board was that really impact? Because, I mean, can you really make 12x return on a 6-year investment in an education company if impact's not there? And then we looked at it and then we understood that though they did say it was affordable training to kids in the affordable segment, it was only probably the top 15% of the layer of kids. It was not at the bottom. So it's a very different psyche you have to apply that if you're actually going to get that many returns, you're not seeing the impact. So I don't know if I'm able to.
Absolutely. I love this example that you just posted because everybody says, I mean, you speak to some experts in the space and they'll say, give me whatever business plan you have and I'll make sure it's got a social impact level component to it. And that starts worrying you, right? I mean, this is a very fine example. Mind you, it's also smart because you need to sustain. And in some cases, if you're only looking at China, I mean, if your focus is to make those returns, then it's going to be very, very complicated to solve big, impactful problems. So it's a catch-22. I don't know what the solution would be, but I almost think that it's if patient capital goes into impact investing, then that's when maybe there's more impact. Oh, yeah.
Thank you. Thanks. Before we switch to questions from the audience, let me ask the one question from me. So I would love to know your advice to founder, how they should build their sustainable, impactful solutions.
Okay, I think I'll start. See, I love two things, building some of the best companies of the world and then building the minds of founders who operate from a sustainable mindset, okay? Sustainable businesses cannot be built until the founders operate from a sustainable mind. When the mind is calm, clear, and quiet, and you're focused, and your vision is clear, you have clarity of what you're doing, understanding of reality is better. So our actions are better, and the outcomes are better. So you need to build from a place of stillness. Again, stillness is very underrated in the ecosystem, and it is a strategy. We are talking about all guardrails for business and your technology. Like, do the founders really have a guardrail? Like, what is yours? So build from there. And then when you have this purpose blended into this kind of impact work, and then you have a clear business model to show all of the things that we spoke about, you're fine, right? Your success rate is much higher than someone who's just trying it, doesn't know where they're going, their teams are not well. Have a strong team. Have inclusion in your team. You need both masculine and feminine energy into it, right? And it's not just male and female, the energies that we are talking about. There is structure, there's go, 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 and then there is also the creative power, the flow of it. Think about it, Marina, if capital can just flow like nature, right? It is regenerative. It just doesn't fix industries. It actually restores. And that's what I would love for founders to build.
Back to the nature.
I can just sort of a bit add into that from a founder's perspective, something we look for is a group or a team which is complementary. So say somebody who's coming from, say, commercial side, somebody with an impact lens, somebody who's got, regulatory aspects covered, and an experience of having worked in those countries or in that region. I think we also come across founders who have completely been on commercial side, suddenly someday they realize I want to do impact. Generally for us, that's not a straight away go, because it requires a mindset shift. See, it's as she rightly said, right? They need to live sustainability. They need to live impact. So it's not an easy switch that suddenly, okay, I was working in a commercial bank or a education company, and suddenly overnight I became a impact, company. So it's the kind of team that we spend a lot of time on diligencing the team, and the founders, the key initial people who come together.
Thank you.
Yeah, tips for impact founders, I'd say follow your passion and make sure you can pay your bills.
Thanks.
I think the panelists have inspired a lot of impact founders here, I'm sure. Anyone want to start their own company or whatever? Okay. So I suggest that the founders fall in love with the problem and then fall in love with their customers afterwards. Well, fall in love with the customers in some way or another, right? So understand the challenges that the customers are facing and therefore really try to solve that problem. And there was an article I wrote a while ago about how the camel survives in the desert. And if you take that analogy, if you're within your community, you are probably the strongest person and able to solve that problem. If you understand it inside out, if you're aware of what the challenges are, you know what all the stakeholders are looking for, it becomes a more profound problem, and the solution becomes more clear, at least for you. And that's where I think the direction needs to go. And finally, unfortunately, there's a lot of, and within impact investing, we've seen a lot of very passionate people. Passionate in the sense, passionate towards the environment, but not really able to conduct a business or live the challenges of a startup. And that needs grit, and it needs resilience, and it needs a lot of energy to be devoted. You need to really dedicate your heart and life towards it. But then, if you're passionate towards solving a problem in the environment, you're usually, I shouldn't be generalizing, but most of the time you're more inclined to sort of be a more peaceful human being without the grit that needs to go out there and fight for it. So again, you've got to be schizophrenic maybe in some ways. typical skill set of any founder out there.
I love it. Thank you. I loved how you presented the passion, and it's actually one piece of the puzzle. You need to have this entrepreneurial greediness and the wish to succeed, just to move forward there and scale. So thank you, and welcome any questions from the audience if we have some.
Good afternoon, everyone. Thank you to the panelists. It was a very interesting discussion. My name is Amna. I run a startup that basically provides solar-powered agricultural solutions to smallholder farmers in Sudan. Something with social enterprises is that it's very challenging to balance between the profit and purpose. So especially when it comes to scale and growth, economy of scale doesn't really work well with social enterprises as it does with normal enterprises, because I mean, you can't really do that with impact as well. So my question here is, when it comes to impact investment, or like basically all the impact investors that I've come across, they are, yes, they're investing in impact, like having social, environmental, or developmental impact, sustainable and ethical and everything, but they have expectations, like market return expectations in this regards. So you might have answered this already, but I want a clear answer again. So when it comes to your expectations, especially in terms of return, how much are you willing to sacrifice when it comes to return in regards to, as like also in like trade-off of impact as well? Because for example, like patient capital, yes, of course, it takes like longer in terms of years, and also it supports the founders themselves. But again, we have another arm, which is like the grants and the donors and everything, but that's not sustainable in the long term as well for us like founders. So that's the first question, like how willing are you, like how far can you go in terms of the return expectations? And the second one is also when it comes to risk profiling. For example, like I operate in Sudan, and the risk there is very huge, but again, $1 can have a huge impact when it comes to like the impact itself. So I want to see like also your thoughts on this. Thank you.
I want to start by congratulating you on the spirit of working in such a challenging environment, trying to solve a big problem as well, and having the passion to do more with whatever your startup business is, but in such a community that to do great impact. And then the second thing is sometimes it's not all about, maybe you're not approaching a problem by looking just for capital that is investing capital. Sometimes it might not be an investor that might be interested in this space, because again, investors usually, and specifically if you label impact investing, you're usually looking for some form of returns and more, and they're in a shorter period, which might not be, suitable for your type of business or your startup. And again, I would look for a different type of investor, maybe more people that are looking for almost philanthropic, potentially more patient investors, more investors that are driven by the similar causes that you have. So that's on one front. In terms of the risks, risks return that's what the direction was for operating in that space. Sometimes it just takes time to catch up to you. So you'd be a leader in that, operating in that very complicated space, and then or a country or a place, and then after time with time you become the only or the best sort of person to represent that solution in that country. So sometimes it's a play of space. Not sure.
I just want to piggyback on that. And these days, strategic investment is becoming very, very popular, right? Strategic investors, I only take those investors who can add value into this model. Can they bring their network? Can they be patient? Can they know what this model looks like? And even otherwise, what is the value add you give into that? So a lot of my founders are not shaking just angel checks, just VC checks. They want strategic investors to be on their CapEx, very clear. And that's what we are telling the founders, do that. It does not hurt the business in the long term, right? So you're married to the right person that way. In venture, we say we have to kiss 100 frogs before we marry the right the right prince. So you need to know who are your investors. And yeah, rest is all good.
Good afternoon, everyone. My name is Dr. Harish Ahuja. I am building a climate tech accelerator cum climate fund in DWTC. My question is very specific to all of you. I think Marina is doing a good job in terms of asking the leading questions. But I do believe, being an impact founder myself and now impact funder, certain businesses like be it renewable, be it green hydrogen, be it green mobility, they should look, once they are sustainable, towards public market, not the corporate VC, or about the impact VC, because the lens with which you like to gauge the impact created by impact founder doesn't work like that. Because I myself am an impact founder, and I think Basem talked about that. For a founder, creating so many filters of impact measurement is next to impossible. I think public market would be a better alternative, and this is a proven thesis. Last year in India, they raised around $20 billion, highest in the world in public market. Highest number of IPO was done last year in India, and I was heading that initiative. 20% equity came for these climate tech companies, be it EV, solar, EPC solar, climate finance company. And this year, they have already crossed 25% of total equity capital raised through public markets. Out of those companies, only few are corporate VC supported or few are VC supported. My question is very specific. Do you think this previous lens of impact measurement come lesser returns is the right filter for funding impact investments? Very specific question. Do you think the lens of measuring impact with lesser return is the right approach to fund the impact investment? Because I think we need a different thesis here. This is my question.
I think that is a requirement, and it must be part of the DNA of any sort of organization or any institution or even a stock market or even a government or whatever. I mean, the whole world needs to kind of slow down the greed of investment and really try to have an impact with it. So absolutely, I mean, I agree with you 100%. You know, I cringe when I see a fantastic solution that is very impactful, but doesn't have any unit economics, or it's not successful, it cannot sustain itself, and you feel bad for it. But if I'd be incentivized by taxation or whatever to support, then that's got to be the way to go. Absolutely.
Thank you so much. I think we are running out of time, and I hope the audience is convinced to invest in impactful opportunities, innovations. Me personally, definitely. Keep going, and thank you so much to be and have this valuable conversation. Thank you.
Thank you.